Hi, Krystal Jackson here from Barbee Jackson Insurance, and today we want to talk about associations. So you live in an association and you need to figure out what type of policy you need. The first thing we need to find out is what type of association you live in or are buying into. To find that answer, you would need to approach the association, whether it be the board of directors or the property manager that handles the association, to determine, is this a traditional homeowners association where everybody owns their own individual property and the association is responsible for all the liability and coverage of the common areas such as playground, swimming pool, clubhouse, ponds, etc. In that situation, it'll be your full responsibility to cover your own property, home, townhome, etc. If you live in an association where you find, and what you want to ask is, does this association have a master policy in place? This master policy will cover all the buildings, including the one you live in. And I want to preface that it doesn't have to just be your traditional condo, large multi-story building. This could be a townhome, a duplex, a triplex, and of course your traditional condo and anything in between. So you want to find out, is there a master policy in place? If you've determined that that is the situation, the next step is to ask for a copy of that master policy. As a unit owner, you're entitled to see the coverage because this is for the whole building that you live in. And if there's a hurricane or a fire, it's the association's responsibility to build that building back, and then you're responsible for your own unit, interior of your unit, I should say. What we're seeing is, with all the changes in the Florida property market, a lot of associations have made the decision to remove wind coverage. And there's a whole other slew of exclusions that may be in there, such as sinkhole, there may be vandalism exclusions, etc. And that you as a unit owner could then be assessed for if there's a loss that's not covered by the policy. And so we highly advise that you obtain a copy of that and review it with your insurance agent. Reach out to us for review and just make sure you understand what you're getting into before you buy in. Or if you're already there, this may be a change that's happened in the last year or two and you know what to expect in the event of a loss, because there could be some situations in which you could have to come out of pocket several thousands of dollars. We're going to get into some more coverage options on that as we expand into coverages. So we'll get back to that in a moment. Let's go back to the first situation. You live in a traditional homeowners association. You have a single family home. The association is responsible for all the common areas. You would need a traditional homeowners or HO3 policy. This is going to cover the home itself, the dwelling. It'll cover other structures on the policy. It's going to cover your personal property or contents. It will cover loss of use. If there's a loss to the home and you need to rent or stay in another place while your home is being repaired. It's going to have liability, which can then also be expanded to include personal injury liability. And then medical payments, which is if somebody gets hurt on your property where you're not liable. You're going to want to look at deductibles. In Florida, it's standard. You're going to have a hurricane or possibly a wind hail deductible. There is a difference there. Hurricane is for named storms only. A wind hail is going to be for any wind or hail damage, regardless of if the storm has a name. And then your all other peril deductible. Every policy is going to have a lot of different caveats, endorsements, and we would advise you to watch one of our other videos that's going to expand into that more. For today, we just want to highlight the basic coverages. Okay, so let's stick with, you have a single family home in an association that you are not going to live in. You're going to rent it out to others. It's going to be an investment property. In this situation, you're going to need either a DP1 or a DP3 policy. The determination between a DP1 or DP3 is going to be location, age, construction, carrier availability, something specifically to be discussed with the agent. A DP1 will be a more basic form, while a DP3 will be a more broad form. Again, like the HO3, those are discussed in more detail in another video, we just want to touch on the different options available. With the DP3, it's going to be similar to an HO3. It will cover the dwelling, the home itself. It will still cover other structures. Your personal property or contents coverage is going to be optional depending on whether it's a furnished or unfurnished, what you have in there and what you provide, how much coverage you have there. Instead of loss of use, you're now going to have fair rental value, which is going to help cover the loss of rental income if the home is damaged and your tenant's not able to live in it and subsequently make those rent payments. You're going to still have your liability and your medical payments, same as the traditional policy, same deductibles options as well. So that covers a single family home in a traditional homeowners association, where again, the association does not provide any coverage for the buildings. Now let's move over to your traditional condo association, which again can also be a duplex, triplex, townhome type situation. Again, it goes back to the structure of the association and that master policy they're providing. So you're buying one of these, you live in one of these, you now need an HO6 policy. This is a policy specifically designed to cover your responsibility, which is going to be studs in. Basically, the association is going to build back the building. You're going to finish your own individual unit. In that situation, you are going to have dwelling coverage, but it's going to be substantially less because, again, we're not covering the main structure of the building. You're going to still have your contents coverage. Again, it'll be applicable to how much you have. And then this is where we start seeing some differences. Here, an HO6 policy can be rated as primary owner-occupied, seasonal secondary owner-occupied, or it could be as a rental where you have invested, it's an investment opportunity, and you're the landlord renting this out to somebody else. In which case, you then may have either fair rental value for that loss of rental income or loss of use coverage to pay for you to stay somewhere else if your unit is damaged. You're going to have liability, but again, it will be adjusted accordingly, whether you're living in it or somebody else's, and then your medical payments. Still the same deductibles. So it's important to work with an agent and to be able to provide them explicitly what you need. And the best way to do that is to obtain a copy of the association's policy. The other thing that would be helpful would be a copy of the association's guidelines and decrees that spell out how the association is structured, what you as a member of the association is responsible for. And then I told you there was one other coverage we would come back to, and that would be the assessment coverage. So in the event that you live in an association where there's a master policy and you're a unit owner, you have that HO6 policy. Let's say there is a hurricane and the building is damaged, the roof is gone, and there's a massive amount of reconstruction that needs to be done to the building. The association will then, or can then, assess every single unit owner to cover the deductible or repairs to damages. Remember how I said there's a lot of associations that are not covering wind or have lots of exclusions on their policy as an attempt to save money with the current market? If you're in one of those situations where there's no wind coverage on the policy, you may be assessed $10, $20, $100,000 as your portion to help cover that loss. If you're not aware of the association guidelines, this could come as a huge surprise in the event of a loss. It's also important to know how that assessment's going to be determined. Sometimes it's done on square footage of unit to make it fair for each unit owner. It can be a flat assessment across the board. An HO6 policy can be endorsed to cover those assessments, and it's important to know what your assessment could be in order to amend your HO6 policy to help provide coverage for that so you're not left coming out of pocket. As a standard policy, it's only going to offer $2,000 to $5,000 as included as a standard But again, we can amend it to make sure you're adequately protected, but we need to know what that amount's going to be to try to prepare for that. If you have any questions, please feel free to reach out to our office. We're always happy to help in any way we can on how the things are structured, the policies, and what coverages you may need to prevent any gap in coverage. You can call us at 850-389-2001 or visit our website at barbeejackson.com. Thank you and have a great day.